Good morning. This is Ron Brown. It's November 10th, Friday morning. It's pre-market 8:06 a.m. Central Time. I'm going to do a video today and do it in segments. Just look at different aspects of the market and scans and so on. This is going to serve as my weekend report. I prefer to do these on Friday rather than taking time out on Saturday or Sunday. I'd rather be doing other things like working in the yard or watching football or walking or whatever rather than sitting at the computer because I get enough of that during the week. So I'm doing this on Friday. I've been trying to do that recently. So anyway, using HDSI with Thinkorswim for market analysis. The market is your teacher. Standard risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you're not using HDSI, you should be. You get a free 30-day trial just by going to highgrowthstock.com and clicking on the link. And no credit cards required or anything. So if you take the time to learn the program, it's extremely powerful. Now I'm going to start this with my analysis of the composite, NASDAQ composite. This is what I sent out this morning, and we'll just go over this a little bit. My comments are the high volume down bar reversal yesterday, and you can see the arrow right here and the VPA flag and the comment up here at the top. This indicates weakness. You can see that the market was trading up near resistance, and we've had a couple of days where it here and here where it's closed higher after struggling much of the day. The day before yesterday, Wednesday. This is actually Thursday. This is Wednesday. Tuesday was a strong day, which got it up in the resistance area, and it looked like it was going to continue to go. But as I've commented many times over the week, the volume has really been in question. Here we had a couple of nice volume days over the 90-day moving average, but the last 3 days have been below it. And then you look at this volume spike yesterday on the reversal, and it shows that there was some fear yesterday, people, traders dumping positions and so on. But the market's still in a bullish mood right now, but there is heavy resistance. Now, as I'm doing this, futures are up. The NASDAQ futures are up 56 right now. We'll see what happens. But I've been commenting all along about the lack of volume on these days when the market started going up. Yes, there were a couple of days here, like I said, where it was above the 90-day moving average, but for the most part, the volume's been pretty light, which suggests lack of participation to me. So let's look at elsewhere here. Best fit trends, the long-term trend is still down, medium's up, short is up. The gap, there was a gap up yesterday. You can see the gap up, and then it failed after Powell's comments. Here is where the volume numbers are. Here and here you can see that the volume was 8.69% above the 90-day moving average, which is right here. Decliners led advancers approximately 3-1, and new highs, new lows. You can see the new lows spiked up and the new highs went down, and the AD line is going down here. I'm going to scroll down here. These are my money flow charts from my money flow smart groups, and you can see that marine shipping, after pulling back for a day or two, had a lot of participation yesterday to the upside. Application software, other financial services, and in those other financial services you're going to find some crypto stocks. Crypto's been moving, aircraft parts, and so on. You can read this yourself, but you can see these were the dominant groups. Now when I move down to the money flow out, it was dominated by biotech, obviously. And oil stocks were down a little bit. Oil's been pulling back this morning. It looks like it's up over 1%, 1.25, so we may see some money flowing into exploration and production stocks today. Renewable energy stocks have really been hit hard, and they continue to be hit hard. But these are just snapshots of where the money has been flowing yesterday and today. Now, as I do this presentation today, you'll be able to see where money is flowing intraday. After the market opens, I'll show you that. Now, if you're members of my Insider Club, you should go ahead and install the add-on. I just put a couple more views in here this morning. If you installed early this morning or Friday morning, go ahead and install again on, well, it'll be there for Saturday morning. You don't pay attention to what I just said. Anyway, these views are going to be here. Notice that I'm in the money flow in on my smart group, which is located right here. This is this morning, and I'm in this. These stocks all had to be up yesterday in here, and they all had to be down in this money flow. So what I did is I went from here directly into the warehouse, and now I am using folder 13. These are the end of day market momentum sectors up with the Wyckoff demand combo, and I also have ETFs in here. You can see by sorting on raw combo, which is higher volume demand. This is what I call my Wyckoff demand combo. So right now I'm looking at the money flow and the end of day market momentum. There's 159 stocks, and I'm going to apply this filter, and that cuts it down to 45. Why did it do that? Because these sectors, I'll show you this, are going directly into the spider sectors and the stocks that are a member of those groups, and they're up for the day. So what I did is I created these groups of stocks that actually represent these sectors. Why did I do that? It's because this is where most of the activity, market activity, is for the institutions and so on. They track these stocks that are in the spider sectors. Now, Disney reported earnings yesterday or the day before. Let me get this out of here. After the market closed the day before, you can see that Disney was up yesterday. And if you look across here, I use these a lot. The days since the 3 crossed the 6 and the days since the VPOC or volume point of control turned positive. Crossed 6 days ago and 8 days ago. Now if I change to, I'm going to use my 2C chart. Here is where Disney crossed over the 3 crossing the 6. Even though it's been in a weekly downtrend, you can see there was accumulation coming in on the weekly, and on the daily also there was some accumulation with the bullish candles. So those institutions that were accumulating in here were taking a chance that earnings were going to be good on Disney, and it's paid off for them, at least on or in the short period. It's got a long ways to go to get back where it was. The trend may be changing from down to up. We'll have to wait and see, but that was a good start yesterday on very strong volume. You can see the volume pocket pivots here. Now let me point this out. Here's where the VPOC turned positive. Here's where the 3 crossed the 6. So the VPOC, or volume point of control, turned positive before the 3 cross the 6, and look at this volume coming in here before the earnings were released. Now remember, this is just the money flow group, and that cuts it down to 45. I'm going to change this to the, going to go up here and I'll just go to all securities. You can use the alternate tab, but I'm going to change it to that. And now there's 125 securities in here. As you can see, if you look right here. Now, once again, these are all the stocks that are contained in those spider sectors, but I'm also allowing certain very active ETFs to come through here. So they're generating signals also. So you can see yesterday on the spike down on the NASDAQ, the UVXY spiked up. So we get, and also the ultra short S&P. This was one day. There's going to be a short-term rally this morning, but I thought it would be good to have both the sector momentum and the ETFs in this folder. So let's go down. So what do we have? 125 here. I need to bring this quick pick up. I'm going to go to the supply side here, what was down yesterday. Before I do that, though, I want to go back to the positive side, and let's just look here. And you can see these are the industries that were up yesterday within this view. PC insurance, information services, packaged food. These 7 NAs, these are the ETS, 4 semiconductors, and so on. Now let's just drop down. I'll use a quick pick. Have to get it out of the way there. And where was the weakness? Integrated utilities, application software, utility networks, and so on. Now these are the industries. Since I'm working with sectors, it probably makes more sense to use the sector view. Healthcare was weak. Consumer discretionary was weak. A lot of technology stocks were weak. Let's go back up to the upside. So more technology down on the downside than up. Financials were up, industrials and so on. You kind of get a feel here for money flow in and out. Of course, you have to look at the individual stocks because there's some of each. Now here, like I said, these are the ETFs, the NA. After the market opens, I'm going to be moving up into the intraday market momentum. I have several selections here, but I'll be looking primarily at 11 and 12, which are the same scans that I just showed, but these are intraday. So we'll take a look at those once the market gets going. But what I find useful is these columns. I look at these a lot because I can see how old the signals are or how new they are. Now here's one yesterday. That's the ultra short I just told you about, the ETF. Let's look for a stock here. Air products and chemicals. The VPOC crossed over 2 days ago. The 3 has not crossed the 6 yet, but it was up 1.6%, closed at 94% of its daily range on heavier volume. So let's bring this up, take a look at it. You can see that this is probably a failure from the earnings report, and now traders are bargain hunting, or they think it was overdone. So it traded down in the 252 range. It's back up to, well, I can look at the warehouse to 263.99. So that is an overdone situation, oversold situation, but it is attracting bargain hunters right now. Now I'll go over here to the weekly chart. Would I be interested in this stock? No, not at all. Look how it really has traded in this range here. This is obviously an institutional stock, and even if it manages to get back up in here, it's really shown no signs since back here that it's going to go on a run. Now you have to go back and see what the news was on this, and you can do that in TOS. I'm just going to bring TOS up here. Okay, the market just opened. The bell just rang, and I've got the fractal charts in front of me. 3-minute, 16-minute, 78-minute, daily, weekly, and monthly. I like to look at this to get a feel for where a stock is over various time periods, and let's see what ADP is doing today. I'm going to maximize this. Looks like there's some more buying coming in a little bit. This is a 3-minute chart. 3 minutes goes into approximately into 16 minutes 5 times. Not really, but it's close. And then 16 goes into 78 minutes about 5 times. 78 minutes, 5 of those makes a daily chart and so on. That's how the fractal charts are made up, etc., etc. So here we go. You can see there's buying coming into it. What happened to this stock? Oh, there's a buy rating on it that came in on the 9th. Here it is. Air Products shares drop after third quarter, misses the forecast. But then there were 1 or 2 upgrades, so it's starting to come back. Okay, let's take a look here. These are the top 10 active NASDAQ stocks, so you can see where the money is flowing based on activity. NVIDIA has been strong recently, except it's a very dangerous stock because, for example, let's maximize this sell. Here's where it was yesterday on the 3-minute chart. It got up to 482.30, and by the overnight low, all the way back down to 465.12, and then buyers started coming in this morning with the futures rising and so on. So it's all over the place. It's dangerous. It's an institutional stock. I've played it a few times, but only with debit spreads, just to limit my risk. But you can see, because the futures, NQ futures are now up 70 points. A lot of that is NVIDIA, Apple, Tesla bouncing back a little bit today. Amazon's actually down a little bit, but this is where the activity is right here. I like to take a look at that. Now let's go down and look. Let's move this over. Here's the composite. It's up 52. No volume on the composite, but you can see that it's moving up this morning. I'm going to maximize the daily chart, and you can see it's starting to form an inside day now. Here's a resistance line that I've put on here. We'll see if this can power up and regain some of that lost momentum. Generally, the early morning really tells us nothing. I like to wait until later in the day to really get a feel for what the market is telling us. Just like yesterday, the market was gapped up, it was strong, but what counted was the end of day after the Powell statement. Going back to this, looking at this a little more, let me bring this up. Let's see. Move this out a little bit. Okay, looking at the NYA first, you can see the advancers 1455, decliners 969. up volume, down volume, and so on. And then let's go down here and look at the comp, the NASDAQ. You can see the I had to widen that a little bit. The advancers minus the decliners, 132. There's 1560 advancers, 1428 decliners. So it's not really a broad-based rally here. 125 on the positive side. Let's go back up and look at this now that I widened that. 454 on the NYSE, so it's a little stronger on the NYSE. Now, these charts show advancers versus decliners, and you can see on the 3-minute chart, if I maximize this, that's unchanged. Let me do this. I want to get on the NYSE. You can see strong opening, but now the decliners are starting to gain on the advancers. How about on the NASDAQ? Same thing. So early morning rush to get into the market. Anyway, sorry about the phone call. You can see we're starting to get a green bar forming here, but this is really a good way to see to keep track of the momentum or the internals of the market. All this information is provided by Thinkorswim. Now, I want to restore this, and let's go in here. Let's go back to where I started today, the intraday market momentum, and I'm going to use these two right here. So what's going on right now with all securities, and remember that these filters go into the actual spider sectors and pull out the stocks. So rather than just looking at the sectors, we can see which of the stocks and also which of the ETFs are appearing near the top of the list. So I'm sorted on raw combo. This is the demand intraday, and I'll go up to the top. HOLX is at the top of the list. This broke, it's up 7.3, well, now it's up 5.98%. Now that just updated, so another stock came to the top of the list. It's up 2.3% for the day. Let's see if that whole logic is down right here. It's up 5.98% for the day. Let's take a look at it. But you can see that it's backed off to 56.67% of its daily range on very heavy volume. I'll bring the charts up by double clicking on it and get the quick pick out of the way. It's been in a weekly downtrend. You can see, looking at this, that 6 days ago, the 3 crossed the 6. VPOC crossed before that. And there is news on it. Now, looking at this, the earnings are out. How do I know that? Because if you look at this earnings due column, it goes out to February 7th. So the earnings are out. So they're not showing up yet, but let's go take a look at HOLX. I've got it here in TOS. So you can see the earnings came out yesterday. I'm going to maximize the cell. Came out yesterday. They're not in the HCSI database now, but you can see the gap open here. And that's why the stock is showing up in my rotation in HGSI on the sectors up. Even though this crossed over several days ago, back in this area here, it was pulling back until earnings. So this is a positive earnings surprise on a stock that's been going down, both on the weekly and the monthly charts and the daily chart. And now it's getting an earnings spike. Well, I'm in here. Let's take a look here. You can see the advancers minus the decliners are improving. It's now 934 positive. 1701 minus 759, and down here it is 518, 1805 to 1289. If we go up to the top, the market is rallying. The futures are up 120. Let's go back down here and scroll down here and look at the comp. It's up 100 points right now, or 0.73. If I maximize this, you can see it's trading at the high of the day and heading back up towards the resistance area. We'll see how it closes the day. And before I going to restore the cells, let's go back over here and take a look at this. So what do we have moving up? Technology is leading the way on the sectors today in my intraday market momentum. Let's see what's happening on the downside. Healthcare is the largest group being hit, then consumer staples, consumer discretionary, and so on. But this is just a quick read on the stocks that are contained in the ETFs, which is where the institutional action is. Let's go back to the positive side here. Okay. If I want to know which groups are the strongest industry groups, what I'm going to do is I'm going to go into industries, click on that, and I'm going to rebuild the indexes and groups. They don't have to show up over here. If they're hidden by a filter, you can still go ahead and update them. And look down here, and we'll see what the industries change to. So if I sort on that, go to the top of the list. So within the sector rotation, you can see the strongest sector is technology and semiconductor manufacturing. Stock is applied materials. It's in here. What I like to do here, look at the industry and then go in and do a secondary sort and just type in range and use the intraday range, and it's going to sort these industries according to the stocks that are trading at the top of their range. And you can see AMAT is at the top, so I'll bring it up. And looking at it, you can see that the 3 crossed the 6 7 days ago. 0 is always the crossover day, and the VPOC crossed a day earlier, 8 days ago. And there was a low volume test and a confirmation of that test. That's a perfect setup. Looking here, you can see that it's trading above the 90-day moving average volume so far today, up 13.3%. Trades 5.5 million shares a day, so it's being actively traded, and it's continuing to go higher. Put a crosshair on here. It's right at this resistance level right here, but this is where you want to start looking for these when they're down here. Up at this point, a big part of the move is probably already baked in. So the obvious question is, how do we find these before they're gone? Well, these signals are going to show up in the view. Now I use actually a wider screen for this, but I'm trying to keep these symbols so you can see them. But what I like to do is I like to go down these columns and see how old these signals are, and at the same time look over here for the VPA flags. Now these are negative signals here, like KLA10 core. If I bring this up, it's going to show me that there was a negative signal yesterday, or a negative VPA flag. Let's move in on this right here, but that's being overcome now. The momentum is clearly to the upside on this stock based upon the 3 crossing the 6 and the volume point of control. But look at this here. This is what I mean when you look. You can look for these signals on this day right here. Look, the 3 crossed the 6. There was an effort to rise, and this stock has not looked back. As far as the VPOC, it turned positive on the same day if you look down here at the bottom. So that's what I like to look for. See how old these signals are, and then at the same time look for VPA flags. It doesn't always work, but it's one way to really narrow down the list of candidates. Now we're a half hour into the market. Another thing I like to do is I like to look at the intraday range, sort on that, and look for stocks that are trading near the top of their intraday range. And you can see that Cardinal Health. So let's start over here. Yesterday, volume was less than average. The spread was below average. Closed in the middle. The signals are 7 days old on the 3 crossing the 6 and the VPOC. It's trading at a high, it looks like. 1% change today, trading at 100% of its daily range. Let's bring it up. And you can see this column right here, the day's high is high, or the day's low is low. If it's a 0 here, it means it's higher than the prior day. But what I really look for here is if this is 798, that means this is a 3.25 year high on KLA 10 core. Let's just bring that one back up, and then I'll come back to Cardinal Health. So here's KLA 10 core. I can look at this column and it tells me it's breaking out to a multi-year high. Now back on Cardinal Health. This refers to the daily charts. It didn't take out the prior day's high, and it didn't take out the prior day's low, so it's 0 on both of these. So it just tells me it traded in a tight range compared to the prior day. Now you don't have to put a lot of stock in these columns here. I do like to look for the 798, though it tells me if the stock's breaking out to a 3.25 year high. Okay, it's just updated. Now you can see that there are 4 stocks here. It's just updated, trading at their daily high. I said some expiration of production stocks may start appearing today because oil is up a little bit. So let's look at DVN. And there's money clearly in a downtrend, but there is some buying coming into here. So these sector views, this is where the action is for institutions. So I pay attention to these. Now, you can see here that Devon, 4 days ago, the 3 crossed the 6 to the downside, and the same thing on the volume point of control. Right here, and it's still negative. There's just a little buying. This would be a very early buy. If it's not really a buy, it's because this chart is weak on the weekly chart. But you can see there's stopping volume here. There was a little bit of accumulation. And if oil prices go up, this stock will probably go up with it. I'm going to take a last look at the market and wind this video down before it gets too long. Okay, let's look at the advancers versus the decliners. Well, they were going up. I'm going to use a 3-minute chart. See, they were going up. Now they've kind of rolled over and started going down again. It's still positive. 705 is the difference. 1602 up, 902 down. This is the NYA. Let's go down to the comp, it's only 128 or 125 on the comp. So 1687 up, 1563 down, move up, and then it started coming back down here. This is a 3-minute chart. What's important is the close. A lot of traders rushed in on the long side today. The futures, the NASDAQ futures have come down. Let's look at the comp. You can see it's at up 80 now. It was up quite a bit higher. It's pulled back. But now buyers are starting to come in again. So it's a pretty strong market today, but we'll see how it closes. One last look here. Let's look at on the upside, and let's look at the industry groups here. Those are the ETFs. On the upside, the largest group is the semiconductors, and then application software. So tech stocks are rallying today. It's really easy to read that by looking here at all securities. Intraday market momentum up. I'm just going to scroll down here. Sort on raw combo. This is the QQQ. You can see it's in here with this list of stocks. And it's up 0.75, trading at 77.11% of its daily range. Volume is running above average, which is a positive. Bring it up, and then this will be it. So here's the QQQ. Here's the weekly. The 3 has remained above the 6, and this projected volume is quite high. Where the magenta line is the projected volume based upon the volume activity that's going on right now. If I get a chance, I may come and add to this at the end of the day, but if not, I just want to show you things that I look for intraday using both Thinkorswim and HGSI. Thanks for listening. It's 3:23. The market's been closed for 23 minutes. I wasn't going to add to the video, but since it was such a strong day, I thought I would come back here and take a look at this and show you just what happened. Now you can see the comp closed up 2.05%, 276 points. Here's the daily chart here. I'm going to maximize it, and you can see that it blew right past resistance here. Very strong day today on the comp. Now, I'll just put this back down here, and I'm going to quickly look at the advancing issues versus declining. Now, this is the NYA, 1,333 more advancers than decliners. If you subtract this number from this number, that's what you come up with. Now, down here on the comp, it was 799 more advancers than decliners, 2560 minus 1761. So not quite as strong, I don't believe, but still very strong on both of them. Now, what's interesting here, and I'll just use the comp, you can chart these, and this is a 3-minute chart. I'll maximize it, and you can see after the initial gap up, there was a short rally, and then advancers versus decliners dropped to minus 20. If you look over to the right, you'll see it says minus 20.99. Up at this point, it was 810 positive, so it looked like this is going to fail, and then the market started turning around, and it closed at 799 positive advancers over decliners. That's a 3-minute chart. Here's the 16-minute chart. Just want a tighter view. This is yesterday. You can see that it closed very weak, but here was the gap up. And then here, I'm sorry, that was a 16-minute chart. I don't know if I said that correctly. This is a 78-minute chart. You can really see how it turns around. But the shorter term charts really capture the movement on advancing issues versus declining issues. This is a daily chart. I'll maximize it. You can see that this is where it ended up, 790, right around 800 more advancers. I'm going to close this, and I'm going to go into the views that I talked about earlier in this video, and you can see that this is a large cap rally, or it was today. Broadcom, Adobe, Applied Materials, MTD, Lam Research, KLA, Costco. Here's the QQQ. You can see that these closed very strongly, every one of them, and there are 427 advancing stocks within these ETFs. And if I go to number 12 for the decliners, there were only 65. So that shows you what a strong market day it was today. And like I said, many of these were just the large cap stocks, and these crossed over. Most of them crossed over several days ago, but here's one, Keysight Technologies. Don't know anything about it, but let's bring it up. Now I've got a chart up here. This is my undercut and rally chart. The dark green bars show where the 3 cross the 6, and the light green bars show accumulation. This is a stock that had a short rally here. Let's move in a little bit on this. Under accumulation here, rallied a little bit, and then it pulled back, and now it crossed over again today. Not a cheap stock. It's in the $125 range, but it's not been a good stock. But these other stocks that were leading, you can see that these have strong weekly charts, and money was flowing into them. A lot of money from funds and so on. It takes a lot of money to drive these stocks and to be able to purchase them, obviously. But large cap market rally. Now I can see that I forgot to put a couple of fields in here that I like to have: relative strength and Kirkpatrick. I'm going to pause this video and put them in. They were in there, but they were just out of view here, so I just had to bring them into view. But I like to have the relative strength in here because it tells me how strong these stocks are compared to the rest of the stocks in the database. This stock that I looked at here, Keysight, you can see that it only has an RS rank of 20. And it's pretty obvious why. It's been in a downtrend for quite some time. I'm just going to go here to my intraday. Let's look at this again. Okay, the information is here. You can see that the volume was heavier than normal. Here's a pullback, stopping volume. Buyers are stepping into this. It may be one to watch, although it's in a strong downtrend. But like I said earlier, most of these stocks are in strong uptrends, and they were just, they attracted a lot of institutional buyers today. If you're looking for stocks for Monday, look for stocks that have pulled back. Let's see what Skyworks looks like. It crossed over a couple of days ago, both on the VPOC and on the 3 crossing the 6. It's clearly in a downtrend. We're starting to see some accumulation here, though. Put a crosshair on here. You can see that it's holding in this area. It pulled back. Pretty heavy volume on the pullback, though. Maybe one to put in the watch list. Looking up here, you can see that the group has been strong, but the green line's going down, which means that it's underperforming its industry group. The earnings are out. If you look right here, you'll see that the next earning date is on February 5th, 2024. So it might be one, if you like to bottom fish, just put it in a watch list, see if it gains some momentum to the upside. Okay, I'm going to end this. This video is longer than I wanted it, but I wanted to come back and kind of sum up the market. I said I was leaving. I'm going to do one more thing. Let's look at the Qs. Okay, here we go. QQQs. Volume was heavy yesterday, selling, but heavier today. So buyers stepped it. This market is gaining momentum now. We'll see if it can go much further, but there's a lot of strength in it after today. Thank you for listening.